Hello everybody, welcome to another update on the stock screener. Today we are going to talk about Steppe Gold. Steppe Gold has released some news. The stock has not done that well since July when the gold price went down, but I'm still invested in it because I see the big picture in the long run. So let's take a look at the numbers. So they said that they have been stacking on the heap leach phase, so of the STGO gold mine, and the stacking is progressing very well. So that's what's on this. We will talk about the numbers later on. So they have about 34,000 ounces of gold on the leach pad, run-off mine pad, and in the circuit. Then they have the new crusher. That's very important because then you can crush the ore much faster. So we can put more on the leach pads. I will talk about this later on as well. Then we have a boiler house here for the winter leaching. That's also important so that they can leach during the winter, which was a problem in the last winter. So this is actually very good for the operations and will improve the earnings. Then they had some COVID problems during November 2020, so they have delays in key goods and services. So that's why they had lower production due to less reagents, due to supply chain issues. So I think, well, they say that they are optimistic for a resolution. But if this gets better, then we should get good production in the coming quarters. So this is a risk, supply chain issues. Gold production was 7,000 ounces and they sold 6,500 of that. That's below the estimate of 50,000 per year. It's around 25,000. So yeah, some 28,000. So this is below the estimate. But I think they can get this higher in the coming quarters. This was probably the bad news, and that's why the stock sold off. Then feasibility study will come up. This is very important. We need to take a look at these numbers. So this study will come up in the next weeks. And this will actually decide if I'm going to keep this stock or sell it. Very important. Because we will know what the capital costs are, what the NPV is, the timelines. So that's very important to watch. They are still drilling, and that's it. So let's take a look at the numbers. And I wanted to first show you how the process works. So they mine the oxide ore from the run-of mine ore. They put it on the pad and then they crush it with the crusher, which has expanded capacity now. So they got a bigger crusher and then the ore can get in faster on the heap leach pad. So they stack all of that ore on this pad and then they add reagents on that. then they leach it out, and that will go into the metals recovery. That is how the process should work. So what have we done here in the last quarters? So we started with 1 million tons ore stacked on this thing here. And also there was a bit of run of mine pads as well, but that's pretty constant at 400,000 tons. But let's focus on this here. So that's about 1 million tons. So you can see the line here, ore stacked is going up. So it's going up at a very stable pace. And the capacity is about 4 million tons. So we are at 50% capacity now at 2 million tons. So this will continue go higher in the coming quarters. So that's the ore that's stacked here. Now, they also said that they had 34,000 ounces of contained gold. So that's this number here, 34,000. So I back calculated it by reducing the quarterly production numbers and taking into account the amount of ore stacked. And these numbers could be wrong, but I think they're pretty correct to say that the gold on this heap leach pad was about 40,000 and it's declined to 34,000. And then I calculated the grade from that, which is calculated by the amount of gold times 31.1 conversion and then divided by the amount of tons that are stacked there. So we have a grade that was very high here, 1.2, probably much higher here when they started here. But the grade is declining. That's what we can see here. It started above 1 grams per ton and it's declining. And that's because the gold is leached out of this heap. And that means that the grade will go down. Now, they supplement, of course, new material by adding more ore. That's the blue line here. And that's why the grade will be a bit stable. So gold goes out, but new ore comes in. This will stabilize the grade. But when you look here, there's some interesting correlation here. I'm not sure if this is a real correlation, but when the grade goes down, you can see that the quarterly production also goes down. That's because if there's less gold here, if the grade is less, then it's more difficult to get it out there probably. And that's why the production is also declining. So we need to get this grade high enough to have about 7,000 quarterly production per year, per quarter. So it is about the same as in December quarter here. So the good news is that production is going up again, but we need to see this go up more. We need to stack more ore and get the grade higher so that we can push up the production back to the level of around 13,000. So this should be around here, 13,000 should be a good number. So per annum, that should be 50,000, and that's our goal. Now this dip here, I think this dip is due to availability of reagents or also due to the winter. So this dip, we won't see this again because we have a new boiler house with winter leaching, and this will be operational in September. So we won't see these dips anymore. Earnings will be stable and production as well, if of course the supply chain issues don't come back. And you can see here also that the crushing unit will be operational in October, and the throughputs will be going up. So this thing here will have much higher throughput, and it will have 3 times the current crusher capacity. So they can add more stuff on this heap leach pad, and that means that the amount of ore stacked will rise faster if they can get more mine ore, of course, more run of mine ore from the mine itself. So it's all about flows. This needs to increase. The crushing is increasing, so this also needs to increase to get more on the heap leach pad. And as they increase this blue line, then probably the grades will improve as well, and production can also increase. So overall, this is not too bad. We see production come back. It's not at our level yet, but I think in the coming quarters, this could keep rising. So there's some positive news in these numbers. Now let's take a look at the revenue. So they sold 6,500 ounces at 1850 gold price. So that gives us 12 million revenue. So that's this point here. And I expect that they will be profitable for this quarter because in December they had positive earnings of 3 million, which means we should have also about 2 to 3 million earnings this quarter. So that's almost 10 millions per year. 10 million earnings per year is around PE of 10. So this stock is trading at a PE of 10 right now. I think it is good value to buy. It's not cheap, it's not expensive, based on a PE of 10. Equity is 43, and price to book is 2. A bit on the high side, but I think this is buyable. Okay. Now, of course, this is just the heap leach operation. They are going to increase production. And based on the PEA, the production will triple from the current 50,000 to 150,000. We still need to see the feasibility study, but I'm hopeful that this will occur, and the AIC will be around 800. So if we then do the EBITDA multiple calculation, and you all know how this works, we just take production times the gold price minus AIC times 5 multiple. And in 2024, when they increase production, we take this number, 150,000 of gold per year. So we get these 2 charts here, 2 lines. We are currently at 80 million, and it should be valued at 200 million, just based on the heap leach. But if we calculate also the gold production of 150,000 in 2024, this is probably the year that they will have it built, then these 87 should go to 700 million. So that's almost tenfold increase. I know it's a bit out of the realm, but this could go up tenfold. Let's say it goes up fivefold from here. That's a pretty good return if you wait 3 more years until they increase production from 50,000 to 150,000. So they only need about 100 million capex from the PEA. And when they have these earnings of 10 million per year, then I think they will have enough money to build this after 2 years, probably. Then they would have 20 million, then add some project debt, and then they will probably get to the 100 million capex with some equity financing as well. And if the gold price also helps, then these earnings could quickly go to 5 million, 6 million, and that would give us about 25 million per year. So these earnings could actually start going up if the gold price goes up. And maybe we can have $50 million cash in about 2 years' time. And that would be enough to build the expanded CIL plant. So this is the update on Steppe Gold. Hope you liked it. And yeah, this is a multi-year play. And our ultimate goal is this fivefold. And we are just going to wait because this company is not going away. Bye.